Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NXP Semiconductors NV quarterly report. NXP Semiconductors NV offers a diverse range of semiconductor products and services across various industries. The company's product portfolio includes microcontrollers, application processors, communication processors, wireless connectivity solutions, e.g. NFC, UWB, Bluetooth Low Energy, analog and interface devices, radio frequency power amplifiers, security controllers, environmental and inertial sensors, e.g. pressure, magnetic, gyroscopic. These products cater to various applications such as automotive, industrial, and Internet of Things mobile communication infrastructure. The company markets its products to original equipment manufacturers, contract manufacturers, and distributors worldwide. The decline in NXP Semiconductors stock price over the past year can be attributed to several key factors. Weakening demand in key markets, particularly in the automotive and communication infrastructure segments, led to inventory corrections among Tier 1 auto customers and a slowdown in demand from European and North American car manufacturers. Declining revenue and earnings across multiple quarters further contributed to the stock's decline. In Q4 2024, NXP reported a 9% year-over-year decrease in revenue and a 9.9% drop in net income. Although Q1 2025 saw some positive results, non-GAAP EPS declined by 17% year-over-year. Macroeconomic uncertainty and sector volatility also played a significant role in the stock's decline. Analysts noted worsening visibility within the automotive sector and expected continued pressure on margins throughout 2025. Specific daily drops in October 2025, including a 7.25% decline on October 10, further exacerbated the situation. The Q3 2025 earnings report, which showed revenue slightly above forecasts but a marginal miss on EPS, also contributed to the stock's decline. Collectively, these events painted a picture of a challenging market environment for NXP Semiconductors, leading to the substantial drop in its stock price from its annual high. The primary drivers of revenue growth or decline can be summarized into three main categories: market expansion, product demand, and external factors. Revenue growth is primarily driven by new markets and products. The automotive end market saw a significant 6.2% growth, while the mobile end market experienced an impressive 29.9% increase in sales. Additionally, NXP's third-party distribution partners contributed to revenue growth with a 14.1% increase. Geographically, China region led the way with a 13% growth, followed by the Americas and Asia-Pacific regions. On the other hand, revenue decline is largely attributed to external factors such as global trade disputes, government regulations, and cybersecurity threats. The decline in demand for certain products, including automotive processors and advanced analog portfolio, also contributed to the decrease in revenue. Net income and profit margins decline in 2025. The financial summary reveals a decline in net income and profit margins for the company in 2025. For the 3 months ended September 28, 2025, net income decreased by $83 million, minus 11.6%, to $646 million. This trend continued for the 9 months ended September 28, 2025, with a decrease of $437 million, minus 21.5%, to $1,600 million. Profit margins also declined significantly. The gross profit margin dropped by minus 1%, 56.3%, and minus 2.5%, 54.7%, for the 3 and 9 months periods, respectively. Operating profit margin decreased even more sharply, with a decline of minus 7.8%, 28.1%, and minus 9.5%, 25.7%, for the same periods. The reasons behind these declines are not explicitly stated in the summary, but they may be attributed to various factors such as increased competition, higher operating costs, or decreased sales revenue. The company's financial performance indicates a consistent generation of positive operating cash flow. Multiple pages within the financial summary confirm this trend, with net cash provided by operating activities being positive in both periods, $1,929 million and $2,391 million. This suggests that the company is efficiently managing its operations to produce a steady stream of cash inflows from its core business activities. The company's debt level and interest expenses have undergone significant changes. Long-term debt has seen a substantial increase, rising from $9.8 billion to $11.5 billion over the period. This growth in long-term debt is reflected in the total liabilities, which have also increased by $1.07 billion. Consequently, interest paid has risen by $43 million, with a notable increase of $22 million in Q3 2025 compared to Q3 2024 and $41 million YTD 2025 compared to YTD 2024. The company's financial performance varied across different segments and regions in the third quarter of 2024. Notably, the mobile end market experienced a significant growth of 5.7%, followed by the industrial and IoT end market with a 2.8% increase. The automotive end market also saw a modest growth of 0.4%. In terms of regional performance, China and Asia-Pacific regions reported growth rates of 2.2% and 0.7%, respectively. On the other hand, the communication infrastructure and other end market suffered a substantial decline of 27.5%. The EMEA region experienced a decline of 5.8%, while the Americas region saw an even more significant drop of 13.9%. These poor performances highlight areas that require attention and improvement for future growth. Management's outlook and strategy. The company's management is optimistic about its future prospects. They are investing $1.2 billion in VSMC to support long-term capacity infrastructure, indicating a commitment to growth. To offset declining revenue from the automotive end market, they plan to focus on ADAS safety products, which is expected to drive growth. Management aims to create capacity for future strategic investments through cost reductions and generate cash from operating activities to fund these investments and pay dividends to shareholders. They also have adequate sources of funds to finance operations for at least the next 12 months, ensuring financial stability. Overall, management's strategy focuses on investing in long-term capacity infrastructure, driving growth through ADAS safety products, and maintaining financial stability through cost reductions and cash generation from operating activities. The company has a history of distributing wealth to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has consistently paid out a significant amount each quarter, with a total payout of $257 million in 2025. Additionally, interim dividends were distributed on various dates throughout the year. In terms of share buybacks, the company has also been active, purchasing shares worth $561 million in the first 9 months of 2025. This demonstrates the company's commitment to returning value to its shareholders and reducing the number of outstanding shares. Concerns surrounding inventory buildup. The company's financial summary reveals growing inventory levels, sparking concerns about potential issues. Notably, inventory has increased from $2,356 million to $2,452 million, a significant rise of $96 million. Furthermore, the company has intentionally added $180 million in inventories to align with expected demand for 2025. These developments are explicitly mentioned as inventory buildup on page 35, underscoring the issue's significance. That concludes the financial summary for NXP Semiconductors NV. Feel free to comment below, and I will be happy to answer them when possible.